This video tutorial will highlight additional technical indicators that are available within the TradeShark software. In this video, I will focus on TradeShark's Bollinger Bands, average true range, as well as the Chikan Volatility Index, which can all be used to help gauge short-term volatility in the market. When combined with TradeShark's proprietary trend forecasts, traders have a significant edge in the markets and are well prepared to profit as trends change and volatility increases. To demonstrate how effective these tools can be when combined with TradeShark, I can utilize this chart for Pfizer stock. Now, TradeShark has done an excellent job at forecasting trend changes in this market. However, at times, it may be useful to use tools that can help measure short-term market volatility. Bollinger Bands, average true range, and the Chikan Volatility Index are great tools to do just that. To add Bollinger Bands to any chart, simply locate the bands from the technical indicator dropdown found within the indicator tray and drag and drop the bands onto the chart. Bollinger Bands have a wide range of applications. They can identify overbought and oversold levels, as well as be a great guide for expected volatility. In this example, we can see that during the downtrend, the lower bands acted as a great short-term price target, with the upper band acting as a great guide for possible upside volatility. On an uptrend, we have just the opposite. Additionally, Bollinger Bands may squeeze and expand, indicating decreasing or expanding periods of volatility in the market. Notice how the bands squeeze together towards the middle of this chart, informing of current decreasing volatility. Now, this can often be a warning that volatility may suddenly increase in the near future. But notice how TradeShark kept forecasting the market to continue its trend, and that increased volatility carried the market even higher, allowing the trader to maximize possible returns. TradeShark users can also benefit from tools like the Chikan Volatility Index and average true range, which measure volatility and can be used to place stop losses. The Chikan Volatility Index allows traders to identify periods of relatively low or high volatility. When the indicator is elevated, traders can expect increases in volatility, which can often forewarn of a trend change or reversal in the market. When combined with TradeShark's trend forecast, traders can approach the market with much greater confidence. Notice how these two periods where the index spikes is characterized by higher volatility and a rejection of the prevailing price trend. Lastly, the average true range measures volatility as it relates to changes in the daily price range. This indicator's value is an ideal tool to help with stop loss placements, as well as gauging the conviction of a market's move. When using TradeShark's proprietary trend forecasts, traders have an enormous advantage in the markets. However, when combined with predictive technical indicators that utilize TradeShark's forecasting ability, traders can achieve even better results from their trading. For additional information on working with the TradeShark software, or information on additional predictive technical indicators, be sure to visit the TradeShark Learning Center and Tutorial Library. Thank you.